everybody? This is Jake Stenziano, host of the Wheelbarrow Profits Podcast, here with my co-host, the multifamily mentor, the coach, the chef, the father of six, the best-selling author, the G-Daddy, Gino Barbaro. Gino, how's it going?
Mr. Stenziano, no hair gel, got a pink shirt, Florida, rocking it.
Don't forget espressoed up. Espressoed up, ready to go.
Espresso right there, bro. Good. No sugar in the espresso. I was going to put some Sambuca, but I said, you know what? I got to bring it for Lucas. I can't go too over the top.
Wow. We want him slipping and slapping in it.
Let me calm down. This is going to be a great call because we got somebody on. I like his platform. It's all about systems and about business and about creating a business. It's going to dovetail into what we do. So, you know, what we always try to do is try to create value. So let's get to it, Jake.
So no more teasers. Today's guest is Lucas Hall. Lucas is the head of industry relations for Cozy.co, the founder of Landlordology.com, a premier education website that reaches over 4.5 million landlords. I didn't even know there was that many people that own property in the U.S. per year. Lucas is also an experienced landlord investor who's counseled thousands of landlords. So without further ado, Lucas, welcome to the show.
Hi, Jake and Gino. Thank you so much for having me. This is going to be a lot of fun.
We bring the panya. So tell us how you got started in real estate. We were doing a little bantering back and forth. Before the call, you were talking a little bit about single families. What got this whole thing kicked off for you?
You know, I'm a little unconventional that way. I didn't actually want to get into real estate, but I met this girl and I really liked her.
It's a love story.
And one day I just asked her, "Hey, how was your week?" And she said, "Oh, it was great. I bought a house." And I kind of looked at her. I'm like, "You're 23. You know, you're doing an entry-level job. Like, how did you buy a house?" And she started telling me more. And she said, you know, she found one. Her sister was a real estate agent, and they looked around and they found a big house in a popular area that had a lot of bedrooms. So she was living there, basically house hacking, finding roommates, and they were paying for her house. And so I thought, nice. You know, she's smart and pretty, and so I decided to hire her sister as a real estate agent and said, "Go find me a house that is bigger than hers and in her same neighborhood." And so she said, "Okay." So a month later, I had a house, and I was doing the exact same thing. I was house hacking, and my tenants were paying my mortgage and paying the utilities, and I was basically living there almost for free. In my own place. And so I started out in real estate because I was trying to impress a girl.
Hold on before we get any further. What about the soap opera part, the two sisters and the romance there? We get into any of that or no? Was there anything like juicy on that end?
Yeah, so the girl that I was trying to impress, here we go. The girl I was trying to impress, her name is Julie, and a little over 3 years later, we got married.
All right. Congratulations, man.
We've been married for almost 10 years and have a 5-year-old daughter.
And two houses.
Well, a lot of houses now. Yeah, we have about 5 properties in 3 states.
Nice.
So is that what drew you to real estate? I mean, other than the girl, I mean, what else did you ever have that aha moment about real estate?
Yeah, very early on. I mean, you can imagine, like, as a 25-year-old buying a house that was well over my salary, right? And buying a house that just paid for itself. And I thought I could just do this over and over and over and over again, and I'll be able to retire like at 30, you know? And then the bottom dropped out of the economy, and I couldn't do that as easily. But what I realized was, like, this is it. This is for me. Like, I can do this, and I can secure a future for me and my family. And then now that we have a daughter, like, all I need to do is hold on to one property for 30 years, and then I'm paying for her college. Like, it's that simple, you know? Mm-hmm. So for me, it was a nice pairing with the financial freedom I was trying to achieve in my own personal finances, but you know, it was a new form and gave me the freedom to go out and, you know, try to do something besides the 9 to 5.
So how did you transition and get into the idea with Landlordology from owning a rental property into Landlordology?
Yeah, of course. So Landlordology essentially came out of necessity. So I was a beginning landlord. I didn't know what I was doing at all, and I like any good researcher, I went to the internet and just said, you know, how to be a landlord. And I found dozens of gurus that wanted to charge me thousands of dollars for courses or some recurring payment schedule that was just ridiculously high. And I didn't have any confidence that I'd actually learn anything. So I just kind of went through the first couple of years of landlording kind of blind and running through trial and error. And after a few years, I started having my tenants, like some former tenants of mine and my friends and family coming to me asking like, "Hey, Lucas, how do you do this thing? How do you be a landlord? What are the steps I need to do? And, is this a good deal or is that a good deal?" And I realized that people were coming to me for advice, even former tenants who, I must have done something right if they came back to me for advice. And then I realized, well, I've got this knowledge that I've learned. Let's just throw it on a website. Like I was a little bit of a web designer, just enough to be dangerous, and I had a little design firm. So I just built a WordPress website and started blogging my heart out. And in that, I was teaching the lessons that I was learning. And I realized very quickly that the traffic started to grow organically and fast, and it started getting attention of other larger companies and even large legal firms, and they were looking at it and saying like, this is a reputable source. And here I was, just an independent landlord. So
it's a cool name too.
Yeah, it means the art of landlording. So that's what I figured I was teaching, and I just wanted to give what I was learning, and I wanted to give my heart in that, and people received it well. So from there, Landlordology grew tremendously, and then in about 12 to 14 months, I started getting offers from other companies to acquire it because they wanted what I was building, and it didn't make a lot of sense, for all of them. But eventually, this company called Cozy came around, and I was talking with their CEO, and I loved what they were doing. So they were trying to influence and help the industry, through software, and I was doing the exact same thing through content, and it just made a lot of sense. So at that time, Landlordology had grown to where I was working two jobs. Really, I was working Landlordology by myself, and then I was working a full-time contractor job, a government contractor job, and then eventually I got to the point where I couldn't do it anymore. Like I needed to either hire help or I needed to give up on it. And Cozy came along and said, "Hey, I'd love to buy the asset, but I don't want to take you away from it. So I'd love to give you a full-time job to continue to run it and be a part of what we're building." And I thought, this is awesome. Like, this is a good example of two teams coming together and really trying to influence the industry together.
How long ago was that when you started Landlordology?
I started at the end of 2012, and the Cozy came along at the beginning of 2014.
Wow, so that was really quick, huh?
Yeah, it was. I mean, it grew like wildfire. And then, Cozy said, we'd love to influence everybody together. And, what I really loved about it was actually that, and this is the kind of the mentality we've had ever since, was that a real valuable tool is something that actually teaches you and gives you the tools to do it. So in this case, we're teaching people how to be a landlord, and we're also giving them the tools to collect rent online and screen tenants and do online applications and listings, and all of that is free. So it's like, we'll teach you, we'll walk you through it, we'll coach you, and we'll give you the tools for free so you can be successful. And that's worked really well.
That's great. So can you dive into a little bit more of other services that you provide there?
Sure. So I mentioned, the bread and butter for our landlords, in a sense, is the online rent collection. So we make that a beautiful, seamless process where you can set up your tenants, either current or new incoming tenants, to pay rent online. That is truly, truly, truly free. They can even pay rent with a credit card or a prepaid card or through ACH. And the ACH part is the free, and then there's a small fee for the credit card that the tenant pays.
Do you guys go through Yapstone or anything on that, or is that your own?
No, we use Stripe as a payment processor.
Gotcha, fair enough. Yeah.
We process about $1 billion in rent every year, so it's not small. And then we also kind of walk you through the whole life cycle. So that's mainly what we started out as, is just the online rent collection. But since then, people use us, and we built products that help you put out a listing and syndicate that listing to a variety of different sites, and then somebody can apply right on that listing through an online application and submit a credit report and a full background check to the landlord, and then apply. And so everything can be done very easily. For example, as I mentioned, I'm a landlord, and so I actually had a tenant come by, look at a place. She was really excited about it, but she said, "Hey, listen, I have two roommates who couldn't make it today. What do I need to do to secure this place? Or, how can I make you hold it for me?" And I said, "Well, you can put down a deposit, but you probably shouldn't do that if your roommates haven't seen it." And so what she did is she took the bus ride home to wherever she was staying, And while she was on the bus, she used her mobile phone to apply to my place herself, and then she sent the link over to her 2 other roommates. And one of the roommates was actually hiking the Matterhorn in Switzerland at that exact moment. And so she stopped, she got the email, stopped to take a break with her crew, and then while they were eating, she filled out an online application for my place on the side of the Matterhorn, doing this massive hike. And so sure enough, that evening I had applications from 3 different people who are in 3 different parts of the world applying as roommates. And, I don't know what's more impressive, right? That the fact that she was able to do all that together, and despite their location, or the fact that that girl had cell phone reception on the side of a mountain. So
it's all technology. I mean, the cell phone reception up there is that's pretty impressive, if you ask me. That's sweet.
So that's a classic example of how Cozy is really being used by modern tenants, people who really want that flexibility. So
is there a software component that pulls it all together as well, or?
Yeah, for sure. So Cozy is the software behind it.
Gotcha.
So it's online in the cloud, and
accounting software, or
accounting too.
Yeah.
Yep. So we track all the payments and every transaction that happens for each of the leases that you have in each of the units and properties. So all of that, you can also export it if you decide that you need, maybe a more robust tool. Like if maybe you're a big QuickBooks fan or something and you want to use that, you can export the data and do anything you want with it. Or we have lots of people who just love spreadsheets and they just love to, build pivot tables and stuff. So we can do all that. We have all that. And then once you find somebody, you get, the credit report and background check, and that's all very detailed. And then you roll them right into payments. And then when their lease is over, you just, you already have a listing you've already built. You turn it on and start collecting more applications. So it's a cyclical process.
Yeah. So you got a guy, he just bought an 8-unit property, right? He comes in, he doesn't want to spend money on like a yardie or something like that. So he's like, this is what I need right now to ramp up my business. He goes on, and what do you do for this guy? So he's naive. He comes in, he runs the background check. He's collected the application fee, and he's like, I don't know, like this guy has 650 credit and he's got like a misdemeanor. Is there any guidance for these folks in terms of, okay, what is acceptable, what's not, and any kind of guidance throughout the blogs and things to help get these guys over the hump and get someone approved?
Yeah, exactly. So I'm glad you asked, because we have lots of articles about tenant screening and criteria that you need. And we also actually have a definitive landlord guide on tenant screening that you can download for free, and it kind of walks you through that process. So we certainly can't give specific legal advice to somebody's specific situation, but we do provide general best practices that are accepted industry-wide. And so, for me as a landlord, when I'm walking through that exact same process, I do have criteria. I want to make sure that I'm not going to be accused of discrimination. I want to make sure that I'm keeping everybody equal. And so, I use a set criteria that I identify and even share with the applicants before they even apply. And I say, this is what I'm looking for. If you don't meet these standards,
spend your money on the application. Yeah,
exactly. So that's, I have those. I'm happy to share those with you if you want. I can walk through them if you think that's a good idea, or if you want to.
Yeah, go ahead. Sure, that'd be great.
Cool. Yeah. So first and foremost, I need to know if an applicant is able and willing to pay rent. So those are 2 very different things. I know lots of wealthy people who have a chip on their shoulder and just kind of like to throw a wrench in the situation and a landlord or some authority figure. So I want to make sure that they either have a job or have enough money in the bank to afford it, and then they also have a desire and a willingness to do that. And so what I'm looking for is, do they have a monthly income of about 2.5 times the rent amount? So if rent's $1,000, I need to know as a household, do they make $2,500 a month? That's not a hard standard to hit. But from a credit standpoint, I want to make sure that they have at least a 650 credit score. And now some people, depending on your location, you could lower that down to 600. I wouldn't go much lower than that, but I prefer 700 or higher, but I'll take a 650. And then I get into the real things. So those are kind of just like easy bullet points, but the real things I look for are, do they have low or no credit card debt? Because to me, credit card debt is truly, excessive credit card debt especially is irresponsible, but any kind of credit card debt, it's like the worst of the type of credit, right? I mean, even the store credit cards. And I look and see, it's like, okay, if someone has $300,000 in mortgage debt or maybe medical debt, like maybe they were in a car accident, broke their back and couldn't pay for it, you know, maybe they have all of a tremendous amount of that type of debt. But I would take $300,000 in medical debt over somebody with $30,000 on a Gap store credit card, you know, hands down.
Yeah, but Gap is so hot right now. It's so hot right now.
So the type of debt matters for sure, and specifically credit card debt. I look at their criminal records. You know, I look at the background check. If they have any sort of violent criminal convictions, that's a no-brainer. Just a no-go right there. I don't want to deal with somebody who has physically hurt somebody else. Because I might have to go knock on the door to replace a faucet and they have a baseball bat sitting behind the corner. You know, I just don't want to deal with it.
Fixer J and the Harley Cruise. Remember that, Gino?
Yes. Yes.
And then last, evictions are kind of my number one.
If they're going to do it once,
so,
they'll push it again, right? So just, yeah.
Yeah, and I want to make it clear, like, you know, a lot of times people don't understand what an eviction is, and it's really just, it's not that your landlord kicked you out, right? That's not an eviction.
Yeah, if you got to that point, you had an option to get out before that happened. So
exactly,
yeah.
That means a judge decided that you were wrong. You know,
well, and you just wouldn't leave, right? Because a lot of times it's like just go, right? You know.
Yeah. But that's okay if you're right. I mean, that's okay if you like rightfully should stay there, and a judge says that's okay. But you know, if a judge says you were wrong by sticking around or not paying rent, then that's clearly bad news. Mm-hmm. So. Those are my standards. I look at that. Everything else can be mitigated or handled through a larger deposit or, you know, other means. But I look at that, and I'll even call the last two landlords and just ask them, you know, what the tenant was like, and if they paid rent, and if they ever left the place in a good or bad condition. You know, I want to talk to that landlord who's like 2 times ago, because that's the person who actually knows what it was like when the person left, not the place that they're currently living.
Mm-hmm. I agree. Who's your target market?
Yeah, so from a standpoint of Landlordology and Cozy, the target market is independent landlords and property managers in the sub 20 unit market. So anybody with less than 20 units is typically who we attract. And to be honest, that's the majority of landlords or rental units in this country. You know, most of them, I think upwards of like 74% are owned by small mom and pop landlords. So that's certainly the largest. I'm always surprised to see big companies like Yardi or Appfolio or whatever, like they exclusively go after the apartment buildings. But, as far as I can tell, there's only about 120,000 of them, different vendors out there, and they're all fighting over, apartments or whatever. They're all fighting over those. So we've got the bigger chunk, and we try to cater all of our lessons and our stories and our articles towards that market, because that's really the people that need a lot of help.
So let me ask you, do you guys deal with weekly renters? Because we've had a couple students who do weekly rentals, and they're in that sub 30 category. Do you deal with weekly renters?
It is out there, and we do talk about that, but it is predominantly year-long leases for that market. So the sub 20 market, they're mom and pop landlords. They're people who are just getting started and don't own 300 unit complex, and they really are not necessarily living off of their properties yet. They're still running a full-time job, so they don't want to deal with weekly rentals. And if they did, they would usually hire a property manager to do it, because they still have a family and a job to take care of.
Mm-hmm. How has your company evolved since your inception?
Sure. So we started out, Cozy and Landlordology started out around the same time. We started out, actually got our seed money from Google. So we approached them and said, like, this is what we want to do. We want to democratize these tools and make it free and give it to the people who've never actually had these tools before. And they said that's the Google way, right? So they gave us some money to get started. And since then, a lot of big name investors really came on and helped us get started. But since then, we have grown to about 500,000 users, and we're processing about $1 billion in rent every single year. So it is we're nationwide in every single country, or every single state, and every small, mid, and large city in the United States, and being used every single day. So we're here to stay, and we're now we're on the cusp of being profitable, which is super exciting for anybody who knows startups. A very small fraction of them ever actually reach that point. So Cozy is here to stay, and it's going to be something that people are going to use for decades to come.
It's really cool to me because you're using a innovative platform like Stripe, right, and growing a new business side by side with that. That is so cool. How just these startups are coming together and working hand in hand and creating like new businesses alongside each other. That's awesome.
Well, Jake, what's really cool about it is, Peter Diamandis wrote that book Bold, and he talks about the 6 Ds, and democratization is one of them, and that's where we're all going. Everything's becoming free. Like he gave the example. Let's say, speaking of the cell phone, right? Yeah. The cell phone's technology 25, 30 years ago was over $1 million with the video camera, with the GPS, with the pictures and all that. And now with technology, everything is becoming democratized. Everything's going to become basically free, but you have to figure out a certain way on how to monetize your democratization. So I like his platform where he's doing payments and he's doing other stuff, but he's giving you the information away for free. So that's how I guess a new business is going to be built today, and that's hats off. That's great. I love the way where the company's going.
One of the things that we've tried to do well is that we work with existing companies that may not actually be reaching certain markets, and we help them build a product that we use, that we flagship for them, but we basically give them our engineering resources and work with them to build the product that we need. So we're redefining some of these tools. For example, a few years ago when we wanted to do credit reports and background checks, we approached Experian and we said, we want to build something that works like this. And they said, wow, we've never done it like that before. And we said, well, why don't we build it for you? And sure enough, we were their flagship tool. And what you see through Cozy was the beginning part of Experian Connect, which is the tool that they market internationally now, and they use it for other vendors. So there's we built that for them, and we're doing the same with Stripe. So we were one of Stripe's flagship ACH processors because we had such a tremendous volume. They wanted to work with us and help us, kind of beta their ACH program. So, Stripe is huge, and we're actually starting to look at doing something with Nolo, which is a legal forms and legal provider. So we're working on building a product with them that we would use ourselves, but then they would also get to use the benefits of that. So we have an amazing design team and engineering team that is just leading the way in a number of different ways, and we see these big companies kind of wanting to pursue us and get us to do these things for them. So it's been real neat to watch the growth and see companies jump on board and say, Cozy's doing it right, so let's work with them.
So give me some of your goals going forward. What do you, I guess we can always project, but what do you see long term?
Personally or company?
For the company. For both. Yeah. Because I guess your personal just blends to totally with the company itself.
Absolutely. So we are working as fast as we can to build a product that truly keeps you inside the life cycle. And what I mean is, like, you can not only learn to be a landlord or property manager, but you can do all of that from soup to nuts inside Cozy. So things that we are missing, and I'm not trying to point out our flaws, but things we're missing and working on
are free though too. So
yeah, exactly. Yeah. But like online document signing and online lease generation, then that's part of what we're looking at doing with Nolo. And so being able to just essentially walk through the whole process of finding a tenant, signing a lease, getting payments set up, handling maintenance requests, everything that you need to do as a landlord, you can do within Cozy, and basically start a business for yourself.
Everything that Yardy's offering, you're going to do it for free. More or less is what you're saying.
Yep. And we've had people who come to us and their comment is, I always wanted to get started in real estate, but I never had the courage and never could figure out how to do it until I met Cozy. So,
see, we were bumbling around and fumbling around in the beginning. We had tenant reports. We were doing, online payment through Yapstone. We were doing, what was the QuickBooks? I mean, dude, we were just like trial and error putting all this shit together ourselves, and then we eventually got with one of the software companies and just kind of pushed everything else out of the way.
Sure.
But it's the same, it's the same story really. Just you go out and you piece together, you systematize the best you can, and then you eventually, okay, I'm going to spend some money and do it. But it sounds like you have an option to accelerate and kind of shorten the learning curve for folks, which is cool.
Well, this is ideal for our, I guess, target market too, Jake, because we're always in the market of trying to educate guys on getting into their first deal. And their first question is, well, what kind of software do you use, or what kind of accounting, and who do you use for applications and all that. So I'm glad we're having this call, because I'm sure a lot of our community is like, well, this might be the solution that we're looking for. Reasonably priced. They've been in it for a long time. And I mean, $1 billion is great. My father would be happy, because my father was always thinking about fast nickels instead of slow dollars. So you've got the fast nickels coming in, baby. You know what I'm saying? That's a testament to the company. I love that. What are some of your goals? What are you looking to achieve in the next 5 to 10 years?
Well, in the next probably 2 to 3 years, I'd like to buy a multifamily property. I've actually not experimented with that much. I usually stuck around with single-family homes or condos. So I want to get into that, and I would love to buy something in Portland, where I live now, and leverage that, the prices of the market now. I think it'll probably continue to go up for a few years. So that'd be nice. Over the next 5 to 10 years, I'd like to expand my portfolio in Colorado, I think. I have some there already, and I like it a lot. So I'm a big fan of the mountains and some of the adventure sports you find out there. So I'm going to also hopefully experiment with some more private lending. I haven't done a lot of that in the past, and I want to get more into that and kind of leverage that rather than the big banks and the credit unions. So I'm trying to expand just my knowledge as a landlord. But I also want to take Landlordology to the next level. So I still run Landlordology here at Cozy. I oversee everything that happens there, and I want to build that into a community. I know that you guys, as well as myself, are big proponents of Bigger Pockets, which is a fantastic website and a community. But Landlordology has the potential to be a network and community just like Bigger Pockets, but for that small independent landlord. So I love Bigger Pockets, but it's almost like a fire hose of information about everything related to real estate. And I don't really care about buying and selling notes. I just want to know how to manage my property. And so that's where I think Landlordology certainly has become, in its own way, that little landlording network. And I think there's a lot we can do with that.
I wanted to ask you this one question, since you have a lot of experience. What's your biggest, area of conflict that you see between landlords and tenants?
Oh gosh, security deposits, number one, hands down. They argue over security deposits. Not just with me, but with other landlords in general. They maybe think that they didn't damage the carpet the way that they should have, or the way that they didn't do, and so they fight over withholding. And so I think that there's a lot to teach landlords about how to properly handle security deposits, and especially around reimbursement time. And documenting condition and all that. So if you look at any small claims court in the country and you ask them what their majority of cases are, when it comes to real estate cases or anything related to real estate, it's usually a good portion of it's about a security deposit. So that's where I see the biggest conflict.
Gino?
Jake, this is Jake's favorite topic, so Jake, you can run with this. I know what he's going to say. So
I'm not going to say anything. What are you going to say?
Well, you're going to talk about the move-in fees and all that, right? I was going to read your mind. We've had that point of contention where we like to use move-in fees right now. We don't want to handle security deposits. A lot of markets won't allow you to do that, but Jake was always talking about that. And even I had the same situation last month. I have one 3-family up in New York. So my brother's handling it. She used her security deposit for the last month. I said, Mark, mistake, but I'm not there managing it. So you go in there, the couch is there. She left the refrigerator full, cockroaches, so the whole 9 yards. So I have nothing to go after her. So now he's going to go. So I totally agree with that. I don't know, but I don't think I could use moving fees up in New York in that area because nobody's using them, right? But I'll let Jake expand on the whole move-in fee because I think it's a fantastic option if you can do it.
Yeah, so I mean, basically, when we first got in the game, it was just a point of contention between the company and tenants, right? So instead of we never actually wanted to go down the route of security deposits. So we actually just will charge, if it's a $700 apartment, it might be $550 move-in fee. And look, it holds the apartment for the person. You mentioned holding the apartment before.
Mm-hmm.
They never have that thing stuck in their head. Am I going to get this move-in fee back? So it's actually a much more comfortable relationship throughout the term of the lease. We do a few things. So number one, they get the app. They do the move-in fee. If their credit is below 625, we use lease lock. I don't know if you're familiar with that.
I am, yeah.
Yeah, so we use lease lock. That protects us from someone busting out. And also we use sure deposit. So we'll do, I think it's like $87.50. So if something does get damaged, there's a $500 bond on the back end where we can go in and bill back for some of that stuff. So essentially the goal is if we have a $12,000, $10,000 lease, the goal is to be able to collect every penny of that, right? And then give security on the back end. So that's sort of been our process and system over the last few months, and we've been trying to really fine tune that. And so far so good, because it's great to show a pro forma and say this thing's going to generate X amount of dollars, but then the real world smacks you in the face. So now we're putting these systems in place to cover our ass essentially, and then take out that contention from the environment. So.
Well, I love what you said about the bond and the insurance, because that's that's where most people don't put those dots together, because you were essentially keeping a security deposit in a way, just you're mitigating the risk through these other policies. Mm-hmm. And I think, you got to have something, whether that's those policies or whether you collect the deposit from the tenant. And I see personally in my life, when I've rented in apartment buildings, the majority of the time they don't collect a deposit either. Apartment buildings and large multifamily, they'd rather do exactly what you described, because it's easier on the paperwork, it creates less headaches, it creates better relationships. But I've seen that small independent landlords, that making that extra step is just a little too hard. That jump to a bond or an insurance policy for it is either something they don't feel like they should pay for.
They think it's hard, but it's not at the end of the day. It's like a mental no, it's like a Tony Robbins mental block. They can't get past that limiting belief. But it's not really. You take 2 seconds to educate yourself and understand it. The next 12 months of your life are going to be easier because you did that, right?
Let me jump in, but let me jump in real quick. It's not even that. It's just all of a sudden you have that paradigm shift in your life where you have a 20 unit, and all of a sudden you go from 20 to maybe 42 units, and you're starting to see things a little bit differently. And I want everyone on the podcast to think of, in life, in any endeavor, you always want to limit your downside risk. So what I think Jake actually laid out there beautifully, simple as possible, you're limiting your downside risk in the investment and in collecting the rent. If you can do that, I think your chances of being successful are so much greater. Now, did Jake and I do that in our first deal? No, it's taken us over 3 years. We accumulated so much in 3 years. We've been on pause for the last 12 months because there's no deals out there. We keep falling in. So it's given us the ability to go back and really ramp up and really help us out with the management aspect of it. And how do we do that? I was fortunate enough to get on the podcast with guys who are smarter than me, like you, Lucas, and guys like Lease Lock, guys who have sure deposit, who I've been able to network with. It's all about getting on these podcasts and actually using that actual content. And it's not only the knowledge, it's the actual action that you take. It's not knowledge is power. The action is the power. You get it and then go ahead and implement it. And if it doesn't work, you just try to use a move-in fee. If the move-in fee doesn't work, go back to security deposits. But you can't say it doesn't work, because we've run across that from a lot of guys. Well, that's not going to work in my market. Well, try it, because if it's never been done, I'm sure something like Cozy's never been done.
Listen, if I can do it or Gino can do it, anyone else can do it. And at the end of the day, you got to get to the point where this is the same as you go to the grocery store and buy a can of beans, right? You get the can of beans, you give the guy $2, right? When we give the apartment, we need to be reimbursed for that because we have costs, right? So it needs to be a fair trade. We need to put mechanisms in place to make sure that we're able to collect.
Yeah, for sure.
Can of beans, baby, can of beans.
Yeah, I really like that model for even monthly rentals, like monthly and weekly rentals, especially. I think that, it's just kind of ridiculous to think you want to try to collect a deposit on somebody who's going to be there for a month or two. So I'm glad you brought that up. And something that we've been looking at Cozy too is we're getting ready to launch a renter's insurance product too, as an insurance provider. So, landlord can require, as part of the program, and require renter's insurance.
Rent payment insurance or renter's insurance?
No, full on renter's insurance, like personal property insurance, and so that that requirement can be monitored inside the program, so we know that if they ever cancel it. But we've also looked at adding on additional types of policies like the ones you described, like sure rent and things that insure against loss of rent or deposit damages. So, building all of that into one program and letting you opt in for that with one check of a box, it just simplifies the whole process for sure.
That whole renter's insurance is really annoying to me because I rented a house for the first time. I rented for a year, $440 for the year for $100,000 of coverage. It is a no freaking brainer, and I wish more landlords would put it out there. Maybe your site has to dedicate it to
that.
Maybe
Seems
a landlord.
steep, Huh?
Should
call my boy Kelly. It sounds like you're getting it sounds a little pricey, bro.
$30 a month, bro. I mean, Florida's more expensive. But that costs nothing. $30 a month.
Dude, why'd you call me up, man? I get you a deal. Come on, man.
You know a guy, right? You know the guy, huh? You're killing me over here. Let me make my point first.
Sorry.
Anyway, the insurance thing. I really think that's a place where you guys. I mean, if you're doing that much in transactions, if you can make $1 or $2 spread on every policy that you guys write, that's a home run. Those are real fast nickels. But also, you're providing a massive service because most tenants don't understand that if the building burns down, the stuff that gets burned in their apartment is not covered by the landlord. It's covered by the tenant. So you talk about that adversarial thing. So your TV gets damaged or stolen. Don't come crying to me. It's your own responsibility. So landlords have to have an ability to educate their consumers or their clients on renter's insurance. And for $15 or $20 a month or $18 a month, if they lump it in with their auto, it's a home run. It's a no brainer for a landlord and a tenant.
Absolutely. It alleviates one of the strongest and most painful points in the process.
I want to complain real quick because the one thing that pisses me off more than anything is that if I required all the tenants to have renter's insurance, right, and it has building coverage there for whatever they do to damage it, right, that I don't get a discount from my insurance company. They could monitor, they could track it. That is the biggest scam in the world. So, anyways, if anyone's out there in insurance land, get it right because it's BS, man.
I agree.
Lucas, think about it. Lucas could probably come up with a product, get in touch with insurance companies, say, listen, we're going to do this. You've got to give us a little break on this end, but on that end, you're going to be totally covered.
If you require these people to have insurance, and if something, they cause something, because that's where it's going to come from 99% of the time from the tenant, that should discount my coverage, my costs.
I agree.
That makes sense. So I see the wheels turning, Lucas. That's your next project, bro.
All right. Dude, I'll buy it, man. Just
That's great. Let me ask you one more question on the long answers. What's your best, real estate investing advice or tip for the listeners?
My best advice, whether you're getting started or whether you're a pro, is just keep learning and that you are what you eat. So you are, in a sense, what you consume. And that's why we have sites like Bigger Pockets and Landlordology and your podcast, where if you want to get into something, make sure you're consuming that from other people who've been there before, because I'll tell you from firsthand experience, running through the trials by yourself for the first year or two is painful and super expensive. And so if you can gain that knowledge from people who've been there and done that, you will become them, a lot faster.
Success leaves clues. That's the first thing. And the second thing is don't be cheap. Pay a little bit on the front end, and you'll save a lot on the back end. It's the learning curve, right, Jake?
I love it.
No comment. No comment. Hey, what on the personal side of things? You're growing a business. Not a lot of people. There's a lot of business owners, but it's there's a lot of trials and tribulations there. What is your best habit for success? There's I attribute a lot of my success to I do this coach's sheet every week where I literally plan out almost every hour every day throughout the week, and so I'm hitting these things to get me closer to my goals. What is something that you do on a daily basis that has really transformed your business career?
Wow. So I look at my tenants as customers, and that's
they are because you're running a business.
They are, yes,
yeah.
But most independent landlords don't.
We just talked about this today earlier. We did a little. I'm sorry. Go ahead. You're speaking. I'm going to shut up now.
So I treat them like customers, and I treat them like really good customers. So after all, they are paying my mortgage, and I want them to know that I appreciate them. And so I will often send annual gift baskets to them. I will check in with them probably way too much. and not asking anything of them, just saying like, hey, how's it going? Is there anything that needs my attention? And I make sure that they feel, loved and welcomed, and that they have a friend in me. And what that has done for me and my success is that it no longer turns me from the landlord into being their I want to say their provider of almost like their team player, their team leader, their team captain. And so now my tenants are now my team that I can rely on. So I have my, contractors meet with my tenants. I have, whenever there's something that needs to happen around the house, like whether it's maintenance or just asking them to take a video of the backyard to show me what it looks like, because I'm out of state many times. They're happily willing to do that, and they will jump on that, and they look at it as like an opportunity to help me help them. So I now have a team of dozens of people, but they're also the people who are paying my mortgage. And so I treat them with respect, and it comes back tenfold, and it makes my job so much easier.
Run it like a business. Totally.
Jake, the Jorge Perez, right? Powerhouse Principles. Make your business, all the people friendly, and work with them, leave money on the table, and try to network with them, and just be a good person and make them part of your life. I totally agree.
Yeah. So you went through, growing basically a property management business yourself, as have we. What is the biggest mistake that you made throughout that process?
I have a tendency to, or at least in the beginning, my biggest mistakes was buying properties that I might not have bought if I knew how to do the calculations a lot earlier in my life. So I bought properties that seemed like a good deal, but I've made them into good deals over time, but they weren't immediately profitable. And nowadays, if I'm going to buy property, it needs to be immediately profitable. I need to be able to see, the exit plan from the get-go, and I didn't do that in the beginning. So my biggest mistakes were just that, for example, I'll give you a real life scenario. I have two properties that do really well as roommate houses, where 5 and 6 roommates or friends who typically right out of college is what it tends to attract. These young professionals who move in and they all share a room, and they love it because they're just paying a portion of the whole thing. But those houses do really well, and they make, sometimes one of them makes about $1,000 a month in profit, which is fantastic. But I can't rent it to a single family. I mean, I can't turn them away, but there's not a single family out there, like a single family unit, that would pay the price that I need it to get in order to break even. So I'm stuck renting to groups of roommates because they're happy to pay $900 a month, for their bedroom and then some shared areas. But I would never be able to get like $5,200 from a single family for this individual house. So, if I could go back and do it again, I would have bought a different house, so I wouldn't have to deal with roommates for 30 years, but overall.
Is it just too much turnover and inconsistency in that deal?
It is. They usually stay for anywhere from 18 months to 24 months, and then I cycle it through, and they're great people. They pay really well, and they pay on time always, and they love cozy, but it's harder on the property, and I'm replacing windows, and I'm replacing, walls. I'm replacing big things.
Well, you're 12 to 24 months out from the frat house, so it's a little better, but yeah, I totally get it.
So it's not your long-term 5-year tenant, which makes it really
especially in a single-family house. The turnover costs are going to be higher, so you want to keep them in there for an extended duration, if at all possible.
Exactly. Yeah.
Jake, it comes back to the buy right, our 3-legged framework, where I made the same mistake 10 years ago. I just sold the property a couple weeks ago. You really got to buy it right. If you can get it nailed down to buying it right, and what does that mean? It means a lot of things to a lot of different people. It has to cash flow. No alligators here. No negative cash flow. That's the first thing. Get negative cash flow. If you're saying, I'm buying this because I think a year from now I'll do okay, don't buy it. It doesn't matter what part of the market you are. You're already starting off wrong.
Yeah, don't buy it because you have interest only for 2 years, and exactly.
Yeah, so buy it right. So,
favorite business book doesn't have to be real estate related, because obviously you've grown, your other business as well. So what's been helpful to you?
My favorite business book is actually The Total Money Makeover by Dave Ramsey. And I read that book as a young guy out of college, and that book and exclusively that book helped frame my mental perspective on finances in general, just trying to limit the amount of personal debt, if not get rid of it completely, and how to save for an emergency fund, and how to build up a business emergency fund for your rentals, and then how to invest properly. So I feel like any good business owner it is going to also have a very solid personal finance structure, and you have to nail your personal finances first before you expect to succeed in business. And that's what the Total Money Makeover did for me. It really got my personal finances in order, and then I felt free and able to actually put money down on houses and really expand the rental business.
Cool.
That's crazy you say that, because I'm actually taking a training with Dave Ramsey, his financial coach master's training. I want to become a financial coach. And I totally and 100% agree with you. You have to get your personal finances in order and have your life in order. And money is not only about investing, it's about being disciplined and having a plan for your life and getting that energy away from money, because people have a block with money, and all it is just basically energy. It's just something you're using for something else. So once people can wrap their minds around that, start their financial freedom account, get 10% down, get rid of your personal debt, lever your business for your personal. Big difference. So I've got a lot to learn in his program, but I'm totally on board with what you say about that. We need to control our lives first before we can go out and start investing our money, and maybe hopefully start leveraging other people's money also.
Mm-hmm. That's great.
So I guess my question would be more along the lines of, what is the best way for folks to access the software? Because a lot of times is it just go to the website and sign up, or is there is it just getting started with the payments? What's that process look like?
Sure. Yeah. So it's all online, all in the cloud. So you can access it on your browser or any mobile device. So like literally any mobile device. And you just go to cozy.co, that's .co, and sign up. And you'll either sign up as a landlord or a tenant. From there, as a landlord or property manager, you can invite your tenants either through, to apply, or you can invite your tenants to start paying rent. Let's, assume you already have tenants that you want to move over to online rent payments. And it's as easy as just adding their email address. And when you do that, Cozy will trigger an email to them and walk them through the entire process of getting set up and adding, their bank account or credit card or whatever they're going to use to pay rent, and get those payments set up. So, one of the reasons why this has been so successful is that we just make it incredibly easy to get
guys
going.
like Gino and I could actually use it.
Well, I don't know about that.
No, he's probably right. So there's no tutorial. I mean, you get on there, figure it out, and run with it.
Yeah, for the most part, we walk you through the whole process with a little wizard. But we also do weekly demos, weekly live demos, 2 times a week actually. And it just, if you want to see what it looks like on the back end and see somebody using it and ask questions, we make those available as well. So, and then we also have a bunch of YouTube videos and a whole help guide, if you feel like you get stuck. But, most of our customers can just, get set up and invite their tenants, and the tenants can get set up to pay rent in about 3 or 4 minutes. So
this is cool, because we have folks that were looking at some of the larger software options, but they may have not been ready yet. And this is the first I've heard about it. So Gino, thanks for opening my eyes to this. This is going to help people.
Well, yeah. I mean, I've known about the solution for so long, but I never thought about it from our students and our members, and I should have, right? Because I'm always thinking about the exit strategy. I'm always thinking about guys getting to 100 units, 150, 300, but they have to learn how to walk before they can run. And this might be the great solution for them to learn. And maybe they just want to continue walking their life, right? Maybe they've got 10 or 15 units and they just want to stay at that point. That's fine too. So I'm always trying to think larger, and that's what Jake and I's contention was. We started out with QuickBooks, which is great, but we quickly outgrew QuickBooks, and we went into some other solutions that we really weren't happy with, and we were stuck. We probably would have really benefited from using Cozy. So I'm also glad. I'm really glad.
Maybe we'd have stayed there forever because it's free, and you know how cheap I am. So. Well, cool. That does it for me, guys. Gino, you got anything else?
No, nothing. I just want to thank Lucas for being on the call, taking time to educate our community. Listen, guys, if you have any questions, hit us up at Gino at jakeandgino.com. If not, check out cozy.co. And just want to thank Lucas again.
Thank you. This was a lot of fun.
Thanks, Lucas.
Bye, guys.
Bye.